I don't even watch the news. All this just comes to me in cryptic dreams that I have to interpret.
There he goes.
Oh boy.
It's a
Nostradamus.
gift.
There he is. Hey there, everyone. Dave Barlow here with the gang from Sell for 1%. Jada Bomb, Rich Saccone, talking about what's going on in the market with rates, unemployment, how listings are going, and whatever else we want to get into here this morning. So, Rich, a lot of activity on your side of the
Yeah, there's been some news. In fact, it was delayed because of the government shutdown, but we did get the non-farm payroll report for January yesterday. The job creation was 130,000. They were expecting more, something in the 60,000 range. So that is not good news for interest rates. We're getting the consumer price index number tomorrow, CPI, which will give us a gauge on inflation. But all in all, the rates are in the high fives to low sixes, same as I've been reporting for quite a while.
Well, now, you haven't been reporting that. You've been reporting mostly low sixes. This is the first time I'm hearing high five.
Let me clarify. We do touch 5% on some loans. It matters what your credit scores are, what your down payment is, and also what the loan amount is. And it used to be that I could just say, here's the rate. It was only one rate, but you really have to check with your loan officer. The 5% rate does exist. And then on government loans, VA and FHA, we're solidly in the fives on those. But from what I've heard this morning, one of the former Fed governors said the March cut is completely off the table and June is less than 50% chance. It just doesn't seem to be a whole lot of movement in rates that people might be waiting for to see something really drop. We're not seeing that right now. And it doesn't appear that's anywhere on the horizon.
Unless we start hemorrhaging jobs, unemployment goes through the roof.
Well, that's the other thing they brought up this morning is the effect of AI on jobs and a weakening job market, which historically means the Fed gets involved and lowers interest rates. But if it's an AI job depletion, there's nothing the Fed can do to change that. A lower interest rate is not going to help the job market if AI is taking people's jobs. It's a very unusual economy from what we're used to historically.
I mean, I can remember 9/11. I had a listing appointment, and on my way, the second plane hits. I remember sitting in the guy's family room, and we're talking about everything. The housing sector primarily saved the economy because there were still a bunch of houses being sold through that issue, even though the airline industry was decimated.
And also the lower rates saved the economy in the 08-09 crash when they decided to lower rates and everybody was able to refinance and put more money in their pockets and the economy boomed. Same thing with COVID. People felt like they could spend money. And there are a lot of people right now who are hurting and really would like to see a lower rate. And I'm not an economist, but I think there's a lot of things that do play into these decisions.
Well, I am an economist. Excuse me.
I'm glad you showed up. What do you got?
And I would postulate to you, not postulate, but, I was but a wee lad at 9/11.
You're also a linguist with that word postulate.
Well, let me
It's
teach
his
you,
word of the day today.
you old boy, something here about the economy. When 9/11 happened, that same housing boom helped create a bubble that then burst in 2008. And that's what you see with the Fed when there's a recession, is they'll cut rates down. But it becomes this boom bust cycle that I feel like, we'll see what happens after COVID spending. The rates were held, I think, far too low for too long, but I think that's why you saw housing prices double. That's not really normal.
Some of the talk this morning said exactly that. In hindsight, they kept rates too low too long, and it caused what we have now in terms of the inflation.
I don't even watch the news. All this just comes to me in cryptic dreams that I have to interpret.
There he goes.
Oh boy.
Nostradamus.
It's a gift.
There he is.
The market,
glory.
Inventory's down again. I mean, we're at 3873 in the whole MLS. So inventory's down. It's just this time of year, and I think what really is this snowstorm that we had, I mean, knocked everything way off track. We were reaching showings as low as what we get when we go to through Thanksgiving. And normally picking up. This year they just fell off the cliff. A lot of sellers are waiting until the spring market. I still tend to believe that's a mistake, and that you don't want to list when there's 6,000 houses for sale. And then the other thing that I'm watching in March, 93% chance no rate cut. In April, 80%. And then in June, even though the Fed is coming out and signaling, oh, there's not going to be a cut in June, the markets don't believe that right now. So we'll see what happens here. So again, if you're a buyer and you're not finding what you want, just hang on a little bit. Don't be too choosy, but if you find about 80% of your criteria, pull the trigger. And for sellers, same advice. I would list it in that early spring market, which is going to be middle end of this month and into March. I would not wait until April to list. In my opinion, my postulation is that March is probably going to be the early spring and the best time to be on the market.
I agree.
March is really close. We're getting there.
Yeah. My old buddy, HER guy, that's where I started 27 years ago, 1998. I remember telling me, Barlow, there's only one reason why a house doesn't sell, and it's price. You know, if it's priced for its cosmetics, one way or the other, it's going to sell. And if you have a house that's decent shape, way overpriced, it's not going to sell. And buyers are a lot more cautious today. All right, guys. I know, Rich, you got a appointment here. We appreciate you jumping in, and a lot of great insight.
My pleasure.
As always, if you're looking to buy a new home or refinance, give our good friend Rich Sircone at Equitable Finance a call. If you're looking to sell a home, keep Jada Baum in mind. We'd appreciate the like and the follow. And if you have any questions, no cost obligation, give us a call. We're happy to help however we can. Have yourself a great day, and we will talk more next week.